Welcome back. Insecticides India recently reported their Q1 numbers. The revenue saw growth of 5%, while EBITDA grew 17% as compared to last year. To discuss this and more, we have Rajesh Aggarwal, who's the Managing Director at the company, joining us now. Mr. Aggarwal, good afternoon. Thank you so much for joining in. You had guided for a 10% plus growth in FY26. The quarter has started with a 5% growth only. What happened here? It's a low single-digit growth that you've seen. Can you give out the reasons for that? And do you maintain your 10% plus revenue guidance for FY26?
Yeah, this year started with a good monsoon beginning, but June was very dry. So being a dry month, the herbicide sales, particularly in the dry crops, that stopped. So due to that stoppage, we had an impact during the first quarter and the growth was limited to 5%. And then there was a tail cutting strategy along with the premium product strategy. So we have been premiumizing our range. We are bringing the new generation solutions in front of the farmer. Last year, about 12 products were launched into the market. And they, as we got the registration, we launched those products. So the contribution from that product was very limited in the full year. We got about 30 odd crores of sales. But in Q1 itself, these products contributed about 42 crores. And the expectation from this year is very good. Heavy rains at certain places. Dams are full. Situation is good. So I believe that we should be able to make up the top line also. Bottom line growth is already more than 18% on PAT level. And I believe we should be able to maintain that. And top line growth also, we should make a recovery in H1 itself. In the Q2, we should make a recovery.
Okay, so Mr. Aggarwal, even though you've underperformed the market as far as Q1 is concerned, you're saying H1 versus H2, you're saying there will be a recovery. Can there be a 10% growth, H1 versus H1 of this year versus H1 of last year?
Yeah, definitely. That is something we are expecting. It should be possible.
And this is along with price realization gains?
Price realization gains are very limited, but yes, it will be along with that.
Mr. Aggarwal, can you split the top line in volume growth or volume terms and realization terms as well? What's the outlook on pricing from here on?
There is no major difference. It is just the change in products because we have brought in some premium products. That's why the volume growth is looking little down. But overall, in value terms and volume terms, the prices in the market are not rising. This year, the prices are muted because the international market scenario is quite stable. So that's why we are not able to take the increase in the market, and sentiment in the market is mixed, though there is continued demand. But due to heavy rains in many areas, the sprays are going little slow in many parts of the country, and many parts of the country is asking for different products. So the price increase is not there. So on an average, it will be stable, like the volume and value will go together broadly, you can say.
Okay, so Mr. Aggarwal, you've mentioned 2 points. The number one, you mentioned that demand was a little patchy in the quarter gone by, expecting a bit of recovery. You've also spoken about price realization being a little subdued. So now, is this mainly because of the drop in demand, or is there significant competition coming in for the products? And does that mean that going forward, we will have to settle for slightly lower realizations?
No, that is nothing like that. But the international market is very stable. The prices are towards the bottom for many products. So that's why the prices are not gaining in the market. So that is the reason of low prices. Because prices from last 2 years are coming down slowly. So that impact has come. So we are not able to take the price increase. So price rise is which was expected because of the muted June and till middle of July also the rains were a little low. So that has impacted. So the prices are...
Got it. Got it. Mr. Aggarwal, you spoke international markets as well. You had indicated you will enter the US markets. Export is not that big of the overall chunk right now. But USA specifically, with the tariff situation which is emerging, do you think you will delay your plans to export to the US? What's happening with the facility here with respect to the US?
At the moment, we don't have the exports to US, but yes, there are certain registrations which are on. As we get the registration, definitely we'll try. But what has happened is that our certain consumers who are near to registrations or who have got the registration in South American countries rather, so they are showing very keen interest because the duty from their country to US is little low. So it may not go directly because of the huge tariff which is there existing today. So it looks that things might move through Europe or through South America to USA. So the other companies can try to move their products, who will be sourcing their technicals from us. So that indirect opportunity is appearing at the moment.
Okay, and tariff impact, if you could quantify for us, that's the first question. And second question, so has, end of Q4, you mentioned that inventory is now almost coming to a bottom. So where do we stand in terms of inventory across players?
Regarding the tariff, it is common for all agrochemical companies like the other things, 25 plus 25. So broadly, it is about 50% at the moment. So it will.
And as a percentage of your total top line, sir?
It's not on us actually, because I'm not exporting anything to USA. So it is zero for me at the moment. So no tariff as such on insecticides India. And regarding the other question was regarding your
inventory levels across the
inventory position is improving because yes, some dry crops like cotton and soybean, their herbicides saw a little muted sales actually. So there are some goods return of that product. Otherwise, everything is going fine. So paddy is good, maize is good, other crops are showing good potential. So overall, the season is in full swing. And it looks like an extended season because the sowing pattern is different. This year, the maize is increasing, paddy is increasing, and the sowing is in a gap of 1.5 months in the entire country. So the season looks extended. So everything looks good as of now.
Okay, so it looks good. You'll be able to achieve your 10% plus growth when it comes to revenues also. Mr. Aggarwal, what about margins? What kind of growth will you see there in FY26 considering the pricing impact that you're talking about? Also in terms of exports, will you be able to do the 200 crore mark in terms of revenues this year?
We are keeping our export target as same, 200 crores, though we are not able to achieve it so far. But since we are expecting certain more registrations and some business of technicals is going to start, particularly in South American countries. So once it becomes regular, then definitely this target will not be difficult. And there are chances that we achieve it. We can touch this figure in this year. And regarding the margins, we have grown by about 120 basic points in the Q1. I believe that we should be able to maintain that growth in this fiscal.
So one quick question. Last year you had guided for FY26, we'll have a Capex of close to 50 to 60 crore with maintenance Capex of close to 15 crore. Is that on track? And secondly, what is the update as far as the product with Bayer is concerned? Has it come on stream?
Okay. So yes, the expansion mode is it's regularly on. So the Dahej plant, we have capitalized the technical synthesis plant. Now we are expanding for the formulation. That also we are expecting to complete by December. And parallelly, there is a new expansion which is going on in Sotanala. So there, the major chunk of this money will be going in this year. And the target is to start the formulation facility in Sotanala by April, May, means Kharif season next year. And by the end of the next year, we'll be starting the technical synthesis unit there also. So which will give a big boost to the company because that is going to be the state-of-the-art DCS operated plant. So which will be good for international markets and for large players because we are looking at the CDMO opportunities from the large companies now.
Okay, all right, Mr. Aggarwal, take that point. Thank you so much for joining in. That's the word coming in from Insecticides India. Q1 did see a blip, but the management is confident of achieving their targets for FY26. The stock, though, continues to be under pressure today as well. We'll slip into a short break. When we come back, we'll get you on the markets and stock-specific action on the other side. Stay tuned for that.